here at SONAR, and welcome back to WithSONAR. This webinar is designed to help explore tools and use cases to enhance your overall SONAR experience. Last episode, we went over our shipper-focused network analysis tool, SCI. This was to help ensure you're set up for success during RFP season, and this week, I'm going to highlight some market insights that you should maybe keep an eye on to ensure you have the data to back those pricing decisions in the ever-changing market. And yeah, just to stay up on all things market related. So I will go ahead and share my screen with you. Okay, so this is within my custom pages. I can share a link to this page in the description box below. But really starting off from top to bottom, I would look at our inbound Ocean TEU volumes. This is measuring the imports coming into the US at time of booking. So it's going to be really that first look at initial demand, really a 4 to 6 week outlook for what could potentially be truckload, rail, to see what to expect. Now, this specifically I have on seasonality mode going back to 2023, and then the shaded blue line here is going to be where we're at for year to date. So currently, imports are looking down compared to previous years, spiked up a little bit later, and we're currently going into the Lunar New Year drop-off. This is really our first more standard market conditions for imports. In 2025, obviously, we had everything tariff-related where shippers were trying to pull forward early to ensure that they had inventory before tariffs hit. And then in previous years, trying to have minimal inventory and kind of level out from the post-COVID environment. So this is more of our normal market conditions. However, there is more tariff talk going on today. So really going to be critical to watch how imports are affected as these new rulings go live. So definitely want to keep an eye on from a demand aspect to see what we'll have coming into the US. So after the Lunar New Year, seeing where this lands when it's coming back up to those normal levels. And again, this is updated on a daily basis so you can really stay ahead of any potential shifts. Now, next, from a volume perspective, I would focus on that truckload volume. This is going to look at all trailer types on a national level just to see overall what is demand doing. How is it trending compared to previous years? Are we having any significant increases or decreases in total volume or demand that I should be aware of? So again, looking at the seasonality mode compared back to 2023, we have the shaded blue on for the current year as well. So we were seeing a little bit of spike up in demand earlier in the month. It looks like this is leveled back out going to those 2024 levels. Again, not seeing anything crazy. It's great that we're not seeing it drop below previous years' volume levels. 2025 was a pretty lackluster year from a volume perspective. So, we're kind of just staying in line with previous years, not seeing too much of a jump off where we're seeing, oh my gosh, there's all this additional volume shipping, kind of just staying stagnant from a demand aspect. However, if those imports begin to pick up, that could be more potential truckload demand. So all good things to keep an eye on for any potential shifts that could create more opportunities for your truckload volume. Now that I have a good understanding of what volume's coming down the pipeline from an ocean perspective, how it's currently trending as of yesterday in the truckload volume, then I want to see what my capacity is doing. So if I get this additional volume, if volume increases or decreases, how is my capacity reacting to those conditions? So we have our Truckload Rejection Index, which is going to measure that carrier sentiment on the market and the percentage of freight being rejected. Again, going back to 2023 levels, and the shaded blue line is year to date. And really since end of 2025, rejections have just been on an upward trend. Typical seasonality when we see capacity tighten around the holiday months. However, to still have rejections this elevated as we're, about to go into March and Q1 is not normal. So this is really telling us that we have seen some of that excess capacity leave the market, and in turn, not as easy to secure capacity, and the spot rates are going to jump up as well. So this is really kind of an outlier compared to previous years. Currently sitting at 13.6%. The annual average for 2025 was 6%, so rejections have more than doubled than the average of last year. So if they continue to stay this elevated, could be an interesting year for capacity and in turn spot rates. Then, what everyone wants to know is, how is this going to affect my rates? What do I need to make adjustments to my pricing decisions? What are rates going to do? So starting off, I would look at contract and spot rates. Like to look at a 5-year look back to see, obviously contract rates are not going to be as volatile, not moving as frequently. So we have contract rates here in blue and then spot rates in purple. Both of these are going to be without that fuel surcharge. So you have an apples to apples comparison, and doing that 5-year look back to see some pre-COVID times as well. So you can see here at the bottom, around the holidays this year, when those rejections were spiking up, we actually saw spot rates get the closest to contract rates, really like neck and neck that they've been since the market flipped in 2022. Now, as we went further into Q1, those spot rates are still elevated and sitting right at those contract levels. Now, if these spot rates are staying elevated and they continue to put pressure on contract rates, then in turn, you're going to see those contract rates jump up as well. So overall, rates are trending on an upward trend, especially compared to previous years when they've just been in a recessive state. And then if you want to take it one step further and just see, okay, well, how are my spot rates looking without fuel compared to previous years? Where are they sitting currently? So this is showing you those van spot rates going back to 2023 and what they're doing year to date. So very similar to those rejections. That's why we always keep an eye on rejections and how they're moving to see how they're going to affect my capacity and rates. So yeah, currently the spot rates, not including fuel, are sitting at 2.39. Which is going to be about 40 to 50 cents up from previous years. If you look at the annual average for all of 2025, we were showing 1.95 as the rate per mile. So spot rates are up, which for Q2, or for Q1, I'm sorry, we haven't had winter weather in a few weeks now, so this is kind of out of the norm, especially on the dry van side. So rates are elevated on a spot basis. And then if you want to look at that 6-month projection as well to kind of see, well, what is projected? Is this sustainable? Is this just a blip that we're going to see clear out as we go further into the year? So currently being at about 240, if they drop back down, level out, we come off of this post winter weather high, they would land about 215. Which is still about 20 or 30 cents up from previous years. So even if they do fall back off this cliff completely, they're still projected to be elevated compared to previous years. Now, the great thing about our projection, our SOMA forecast, this is going to update every single day. So if we have another winter storm hit, if we see an increase in demand, tariff ruling just causes all of these imports to come in. This forecast is going to adjust daily based off those market conditions and seasonal trends. So definitely one to keep an eye on with those spot rates just to prepare for any potential shifts. Now, once you have a good understanding of how the market is operating from a national perspective, then you can start drilling into those specific markets that either you're already operating in or you have new potential opportunities that you want to just get some more information on. How is this affecting my markets, where I'm seeing the most troubles? So let's say you are doing a lot of volume out of Laredo, specifically for dry van. This is going to show you the truckload volume for vans and Laredo specifically. This is going to be just a 2-year look back going to 2024. So you can see with current year here in the dark blue, we were seeing the increase, which looks to be pretty in line with other seasonal trends, and then it's kind of dropping back down. But following closely to 2025 levels at the moment. So if it continues on that path, 2025 could be a good basis for what I can expect from a volume aspect. Or if it starts to veers off track. The great thing is updates on a daily basis so you can see any adjustments. So if you're being offered more volume and you're seeing volume spiking up overall, knowing that demand out of this market is increasing, so that could be more potential opportunity for you. However, if it begins to drop off, knowing that you may not see as much volume as you have for previous years of Laredo. Now, once you know what volume's looking like, if this is going to be, more of an increase year or a decrease year out of Laredo, you can then see what your capacity is going to be doing. So if I secure any additional volume, am I going to be able to cover it at the same rate? Is it going to be a tighter market? Is it going to be an easier market to secure capacity on? What is that going to look like? So I would then look at my van rejections for Laredo here in blue, and then compare it to the national average in peach to see, how is it trending on an overall level? What does it look like compared to other markets to really know what capacity expectations I'm going to have? So Laredo's rejections are currently sitting at about 8%, which is going to be lower than those national van rejections. So overall, capacity is a little bit looser than national average, so a little bit easier to secure capacity. Carriers are not rejecting as much freight out of this market as other markets on a national level, and in turn, not as difficult to find capacity, and your rates are not going to be quite as elevated. So it's pretty desirable from the carrier standpoint. So nothing too worrisome to look at there. Then if you want to dive deeper into Laredo specifically and see, is this out of the norm for those rejection levels compared to previous years? You can see the year over year going back to 2023, which it does look like for current year in blue, rejections are up out of Laredo compared to those previous years. However, we know from looking at national data that rejections are up across the board. So while this may be abnormal for the Laredo market, it's not abnormal for what's happening on a national level. So if I still look at the trends, looks like it's going to drop back off, I can prepare for that and know how to adjust my capacity and in turn rates accordingly. Now, if you want to dive deeper into those lane level rates, you can also see spot and contract, how they're trending, and compare accordingly. All these are available with your current subscription. I hope you enjoyed this episode of WithSONAR, and we'll come back next week.